Hi everyone, today we're talking about if there's going to be a recession in 2020, which is a hot topic right now, especially in the media. And obviously being a stock market channel, I'm going to talk about how that could affect the stock market and also link that back to the recession. But I'll explain both of them as well. But a recession is certainly a hot topic at the moment, especially in the media and on YouTube. I've been seeing a lot of recession 2020 videos at the moment going around. But I thought I'd try and present quite a few facts today, talk about all the key signals for a recession, go through them with you. And I'm trying to make this more of a factual video rather than a video that I've seen quite a few that have definitely gone for the views and tried to scare quite a few people. So I'm going to try use facts as well here today to try and help you go through this. So recession 2020 is something that I've noticed being pushed heavily in the market at the moment, or on the media as well. And I think one of the main reasons is because they have to get the viewers in. Now, to get the viewers in, a stock market crash or recession are the two things that the media likes to talk about wherever possible to try and get the viewers in and try and scare people. And that's what gets people watching the channel, get them viewer numbers up. Now, when we hear about recession and a stock market crash, especially over the last year, I've heard the media talk about, is there a crash here? Is there a recession here? Quite often. And I think they've been talking about it probably, I would say, at least 1 week out of every month they've been mentioning about it and saying, is it possible that it's going to happen? And it's still not happened. And the one thing I'm going to say about a stock market crash and a recession, they are very hard to time. And pretty much most of the time when you are considering a recession, or if it's going to happen, you don't really realise that you're in a recession or a stock market crash until it's too late and it's happened. But at the same time, that you are then entering some good opportunities to invest into the stock market. And in general, there's a lot of opportunities to go and buy things out there when a recession in the stock market happens. Recessions and stock markets crashes tend to be viewed as very negative things. But if you're watching this channel, you're probably going to be an investor. And these times for you as an investor are really good times where you want to be investing into whatever industry you're in. Maybe it's the stock market, maybe it's real estate that you're in. Both of these times when recessions and stock market crashes happen, these are really good times for you as an investor to go in. And you should actually really look forward to a recession or a stock market crash, because that's when you're going to get really good discounts because everyone else has been scared off. But if you're a hardcore investor and you know what happens after a recession and that everything tends to recover at some point, then these are great opportunities for you to go buy things. So at the moment, pretty much every major person out there is saying there's a 30% chance for a stock market crash or a recession, and I'm pretty much happy with that assessment. Like, when you consider 30%, that's actually a pretty low number. That's just over a quarter, chance of this actually happening. So it's not even a 50-50 shout, and I think that when it gets to the 50%, then you could be slightly more worried. But for me, 30% is still a pretty low chance. And for me, if I was pushed to actually say how much do I think there's going to be a chance of a recession, I would probably say 30%. I would say there's more chance of a stock market crash than a recession right now. So how often is a recession? Well, a recession is roughly every 4 years. But for a recession, it depends who you're talking to, because a few people are going to say different things. Some people are going to say a recession is going to be a slump in the economy, and quite a few other people say a recession is where there's 2 quarters of negative GDP growth. So it's very hard to track that. Personally, I like the GDP growth because it's very much down to opinion on a slump in GDP growth. So I like to actually see a 2 negatives quarters, and that's kind of stands out there as a recession. And that's what we saw last time in 2008. Now, if we were to have a recession or a stock market crash in 2008, I don't think it would ever actually be that bad, because of everything that's been put in place now. So when we talk about a recession and stock market crash, I don't think you'll ever see what happened in 2008 again. So that's something to put on the record. So what I'm going to do now is I'm actually going to show you a few indicators of what a recession would look like and what happened previously, and talk about these and say how close these are probably to affecting a stock market recession right now. So the first one here is a actual GDP growth of the US at the moment, and you can see just on the far left of the chart, you can see what actually happened in 2008, and you can look at how bad that growth was. And that's why I say 2 negative quarters of GDP growth, and there you have your recession. And you can see right now, the last one was on this chart is Q2 of 2019, and you can see like right now the GDP growth is still about 2%, and that's pretty decent overall. So you can see at the moment that when we look at GDP growth, it doesn't look like we are anywhere close to it. But if you have a look actually at the start of Q4 in 2007, you can see that negative growth can come out of nowhere. And then if you look at 2008, the Q2 growth, that was actually okay, and then bang, we got hit by quite a bit of negative growth there. So you can see it's hard for GDP growth to predict what is actually happening, because it can just turn so quickly on you like that. Unemployment is one that is tracked as a recession indicator, and sometimes when you see a good employment number come out, that's what kind of like stops people talking about recession for a while if unemployment keeps going down. But you can see when we actually go under 4%, you can see it tends to trigger a recession, and we are just about under 4% recently as well. You look at that decline from back after the 08 recession to now, and that's absolutely crazy how much that's declined. But you can see that we tend to stay under 4% for a brief amount of time, no longer than 5 years really. And normally when we do get under 4%, that does indicate a recession. So while we are still under 4% on unemployment, I think that it's safe to say that we are okay. I think if we did see the unemployment number start to creep up by another percent, so if we start to get into the 5% territory, you can see when it has pulled back by a full percent or more, that has normally triggered a full recession there, which are the darker bits on the chart. So unemployment is a great number to track, and at the moment unemployment seems okay. Now I think that one of the problems is that when we do tend to get a low employment, we do have people buying a lot more, taking on a lot more debt. And you can see on this chart here, this is the actual debt levels, and you can see that it peaked at 08, and then people really calmed down on the debts, and then people kind of got a little bit more confident after 2013. We started having a lot more people getting a little bit more debts, and we can see that starting to climb back up again, and now that's past 2008. So that's kind of something a little bit worrying. But when I actually show you the next chart, it doesn't actually seem that bad. So this is the actual loan default, and you can see here when we got to the start of 2008, there was a sudden spike in loan default rates, and actually by the time we got to the mid 2008, we had seen a jump from about 0.5% all the way up to about 7% in mid 2008. So you can see loan defaults here was a big trigger for a recession here, and that kept going up all the way to the end of 2009, and then eventually it started calming down a little bit. Now the really interesting thing is that we see here the chart finishes in 2008, and the forecast here was the forecast for this year, and you can see that the actual loan default rate was supposed to increase. Now actually I have gone through the numbers of what has come out, and it is actually dropped from here. So this forecast has actually gone wrong. They actually forecast the loan default rate to carry on going up at a slight rate, and actually it's gone down. So you can see that this has been wrong. The increased default rate might signal a recession. Normally this one is one that I would say that when it's happened, it's a bit too late because you're already in a recession. But you can see here what is the projections have gone wrong. So it just shows you that analysts aren't always right with the projections. Now this one I'm going to show you is actually a one that stands out to me a little bit more than other charts, and this is the manufacturing numbers, and this actually affected the stock market just last week because manufacturing was at its lowest point for quite a few years, the last 10 years since the last recession that we had, and you can see that it has been a big slump at the moment, and that is slightly worrying from in my point of view. But at the same time, you can see that we did have a slump in 2011, 2014, and that didn't lead to anything. But it's just such a a big slump at the moment that's slightly worrying. But that did bring the stock market down the other day. Now, this chart is one that you'll see all the time, and whenever you hear recession, it's normally followed by the yield curve. And I've got to say, this is probably the strongest one that I'm going to show you about supporting a recession. I think all the other charts I've shown you have pretty much said a recession isn't going to happen, or it looks like it's not as likely. But the yield curve is the one that supports the recession the most, and this is why when people talk about recession on the media, it's the one that's always mentioned. So you can see here when the yield curve does drop, recession is very much shortly after when it does drop. You can see here that it has dropped towards this year, and only slightly after when it does invert, then that does signal a recession. So the yield curve does tend to say that we are due a recession. But to be honest with you, by now, after it did drop, we should really see a recession probably within like the next year. Is what it's saying on this one. So it'd be interesting to see if a recession does happen, or the yield curve does break its trend of not having a recession after the yield curve does go inverted. So guys, after all them charts I showed you right there, you can see that the yield curve is the strongest one to support the idea that there will be a recession, and that's kind of suggests that there'll be a recession in the next year. But everything else seems pretty stable at the moment. I think the other one is the employment number to track. I think if we ever do see that jump 1%, then that could signal a recession that is here. And I think that'd be a good time to judge it right there. If that was to happen, obviously there'll be a lot less spending happen because people are starting to come out of jobs. If there's a lot more spending happening, then obviously that's going to lead to less growth. Then unemployment numbers would rise again. People will start defaulting on our loans. So that's probably where we would see the start of recession. So for me, my opinion right now, the biggest the chart to track is the employment numbers right now. In my opinion, that should signal when something can happen. But like I say, right now, it doesn't seem like massively there's a chance of a recession happening. In my opinion, there's more chance of a stock market crash than a recession. And like I say, I don't think we'll have in my opinion, I don't think we'll ever have a recession like 2008 again. We might have a slump in growth, and that would be fine as long as we control it right and better than 2008. But like I say, guys, as a point of being an investor, you kind of want to see a recession. You want to see a stock market correction because there's some really good bargains to buy out there when it happens. But in my opinion, guys, I'm kind of not thinking about a recession right now, but I always do keep a little bit of cash on hand in case one does happen at any point. Like back in 2018 when we had that big massive stock pullback, great opportunity to buy things, and if you did, you're probably up on your investments quite a bit back then. So that's me talking about a recession in 2020, guys. I hope it helped you with all them charts that I showed you. If you could give the video a like, that'd be amazing. Subscribe if you haven't, and I'll see you in the next video.